Good morning. It is the morning of December 3rd. We are about 30 minutes before the stock market opens. And in this live stream, we're going to be taking a look at the market, seeing what is going on as we begin the month of December. We finish off a year that has been a good one. It's had some interesting moments, like the big sell off we had in March, April, followed by a very fast rally of stocks going higher. And more recently, we had a pretty good sell off in the month of November, but the market didn't like selling off, probably just didn't feel good. So the market rallied higher last week, pretty much made up that gap. And we were probably pretty happy. We had been well fed on Thursday, eating Thanksgiving dinner with family and friends, and the market was going higher. And then it finished off the week on a positive note. Now, this week's been a little trickier to figure out. We've had some stocks going up, some stocks going down. No particular direction that the market has taken. And we'll see how things, sort themselves out. I am joined by my colleague, Daryl. How you doing this morning, Daryl?
Doing great, Victor. Good to be here. Thank you.
Great to have you. And what we're going to do on this live stream, as we do in the morning live streams that I join forces with Daryl, is we're going to look at stocks from two big perspectives. One being looking at fundamental analysis of a company and its stock, trying to value that company based on the cash flows that are expected from that business, valuing the profits expected from that business, seeing the desirability of that business defined by, is the business growing fast? Can it defend that market? Those kinds of things. And establishing a point of view on the value of that business from a fundamental perspective. That's what I do. And then Daryl will look at the technical analysis and see what investors have been doing, traders have been doing with the stock, and determine if it's setting up to sell off. Is it setting up to rally higher? It's really interesting to see the two sides. Sometimes the two sides paint a very opportunistic picture where fundamentals are great, stocks set up well. Sometimes they're going in opposite directions. The fundamentals are terrible, but the stock is setting up great, or vice versa. And it's good to see both perspectives. And I hope you get a lot out of this live stream. The intent is to help you become a better investor overall, help you make more money each year. And please put comments in the chat. It is good to see we've got a good number of people on already. It's good to see Shamba Basher. Good morning to you, sir. Thanks for joining. And as we get started, let me just thank our newest member for joining. Appreciate you joining and becoming a member. And if anybody else is interested in becoming a member, I put a link in the chat there. You can get information on the 4 levels of membership that you can get involved with. So going into the stock market this week, we have a lot of earnings coming out from software companies and mixed in a couple of other companies. Like we had Marvell announced, and they're a semiconductor company. Pure Storage is a computer hardware company. But the software space has been a space that's been beaten down over the last couple of years. The story being, we now have AI, and AI has been really useful. I've been using it more and more, and probably everybody that's watching has been using AI a little more. And there's a theory that AI is going to change the way we use this software, and it could hurt a lot of software companies. It could remove the need to license software from companies like GitLab or Salesforce or Adobe. And, really a lot of different companies in the software space have seen their stock prices go down. Now, I happen to think that the story is overdone. Is there going to be an impact on software? Yes. But the same threat that I think the market is, putting in the story is actually an opportunity for a lot of these companies. Who's going to take it on and use it as an opportunity? Who's going to grow their software business to become bigger, more profitable, generate more cash flows, maybe become more important in the markets they serve? That's what these businesses are working on. And I think that the software space is really setting up to potentially be one of the great places to make money, to see performance in 2026. And this week, we are being served with earnings. We have earnings from MongoDB. They're a software company focused on database. We're going to take a look at Mongo. We had CrowdStrike announced yesterday. We're going to look at CrowdStrike. They're a cybersecurity software company. We had Okta, Box, GitLab. Later today, we're going to have Salesforce and Snowflake. So we have plenty of software companies that are going to announce. And it'll be interesting to see, are we seeing a theme with these companies? Are they growing their businesses and maybe citing that AI has been the place where they're growing? Or are they not growing? The market sells off these stocks because maybe the theory just added some credibility. Look, sales, and this is all imaginary, Salesforce is not growing. So stock sells off. We shall see. As we go through these stocks, and I know I'm going to surprise Daryl a little bit, but later in the stream, I'd really like your comments on CRM, Salesforce, and your implied move, if you've determined that already. If not, maybe you can just comment on it, because I would love to hear those comments from you.
Okay.
And we'll get to that later in the stream.
We'll walk through that manually so everyone can see how I calculate those implied moves.
That'd be fantastic. Thank you.
Okay.
And it looks like Magical Self is on. Good morning. Yesterday, a few stocks looked attractive. Okta, Genmab, United Therapeutics. What would you choose if only resources were one to start a position? Oh, man. Genmab. That would be my choice. And FYI, I came out of yesterday's research with Okta and GMAB as new ideas, opportunities. And I'm actually going to create a video for members. And I'm going to look at the three, I'm going to call them the three best ideas that have come out of recent research. And then the third idea is coming out of a video I did on financial stocks. There was a stock in there, very known, well-known company that they're looking really good. The stock market's discounted that stock, and I'm going to create a video on those. But we can comment on Okta and Genmab later. United Therapeutics, there was no news there. I own the stock. I love the stock. I'm going to hold the stock. I own a lot of the stock, so I'm not buying anymore. And that's the reason why I'm not buying anymore. But I could totally, if I did not own United Therapeutics, it would be stock I'd buy. Now they're doing well. Genmab is doing great. We can look at that toward the end of the stream. I'll put that on the request. And then United Therapeutics, we can add that to the list. And we'll look at that as well. So good to see you, Magical Self. Thanks for tuning in. It looks like Peter is on. Good morning. Good to see you, Peter. Shamba Basher. Defense stocks would do well.
Let's add RTX to the list today because I saw something interesting in the charts when I was doing my review.
RTX is on the list. Defense stocks will do well this week given the lack of progress in Russia. Yeah, so they're they're trying to, I get, and I'm not like a big geopolitical guy. I pretty much follow the main storylines, and from what I'm seeing is it seems like they're talking. That's positive. They're probably negotiating, and Russia wants to get the best deal they can. Ukraine wants to get the best deal they can. And I know the U.S. president's involved to probably help move things along, so to speak. And hopefully they figure it out. I'd hate to see wars happen, and we'll see what happens. But we'll look at RTX and comment on the defense space this week. Jeff, thank you for joining. Looks like A-Lab futures trending up today. Man, A-Lab yesterday had volatility. Man, that kind of volatility is expected out of a high growth stock, but it's actually a stock that if we have time, I'm going to put it on the list. I'd love to get your comments on it, Daryl, because I'm seeing a trend, and I don't want to kind of lead the witness, so to speak, but I'm seeing a trend that I'm a little concerned about. But you handle the technical analysis at a very high level. So I wanted to get your comments on what you're seeing with A-Lab and learn a little bit along the way for me. All right, so we got a lot of earnings going on. Just take a look at the market one last time. So one thing, crude oil is rising. And we've had crude oil rise on Monday. Energy stocks went up. It went down on Tuesday. Energy stocks went down. And now it's up again today. Guess what? Energy stocks are going to go up. So it's interesting to see. I guess they're going higher with the comment that Shamba Basher put out there, which is the lack of progress with Russia means that the Russian oil, because Russia does have a fair amount of oil, is maybe not expected to hit the market as quickly as maybe thought. And therefore, the supply is going to be limited. And that therefore is rising or creating a rise in oil prices. So that makes sense. All right. The other thing I'll note, this is not a crypto live stream. It's not a crypto dedicated channel, but I have invested in Bitcoin, been a holder, a hodler for years. And Bitcoin has recovered. And the reason I'm going to point it out is if Bitcoin is going higher, that means that growth stocks, higher risk stocks are probably going to go higher. The appetite for risk is in the market today. All right. Any general thoughts on the markets, Daryl? Anything you're seeing over the next week and a half or so that is worth noting?
I just expect things to be a little uncertain as far as volatility and what have you over the next week or two as the mutual funds are doing their distributions and selling stocks and buying other ones and rebalancing. So I expect the next, at least the next rest of this week and next week, I expect it to be a bit volatile.
Yep. And we'll see if we get a Santa Claus rally. Maybe it might be volatile for like 2 weeks, and then we have a rally. The Fed is going to meet on the 10th of December and make a decision on rates. I think that's going to impact the market, or it may not be much of an impact. I think if they announce a 25 basis point reduction, I don't know that it's going to have much of an impact on the market, maybe a little bit of enthusiasm. If they go 50 basis point rally, if they don't reduce rates, I think we could see a sell-off because it's already priced in. If you look at the predictions, they're supposed to reduce interest rates, the borrowing rate by 25 basis points. So that is coming up. The earnings that are being announced might cause a little rally or a sell-off in software, but no other big earnings are coming up in December. Can you think of any big, gigantic ones that are coming up?
Not big ones. Costco is my only holding left that has to report.
When do
They
they
come up
report?
next Thursday
Oh,
after
okay.
the market close.
That one is substantial, and it'll tell us. I think the Costco earnings will tell us how the consumer's doing. It's almost a little bit of a mini economic report. Are they selling more stuff? Are they able to raise prices? And that'll be interesting to watch. Costco hasn't been appreciating over the last year. It's, really hasn't done much. And their growth is limited, but they grow better than Walmart. That's one thing I'd point out. But we'll see what they announce next week. If they surprise to the upside, I can see the stock moving higher. My pick within retail, consumer discretionary retail is Target. That's where I'm buying in. Okay, so let's get into it. Good morning, Benton, by the way. Thanks for joining us. And everybody on the stream, we are going to get on a list of stocks that we're going to review, but we are member driven. We are all over the chat. If you are a member, like our newest member that joined, you can suggest a stock in the chat. We'll put it on the list. We'll take a look at it. If you're not a member, no big deal. You can buy a super chat, $5 super chat, and then we can look at a stock that you're interested in. And don't feel like you're going to have to wait, 6, 7, 8 stocks to see your stock reviewed. We're going to get on this list, but as the chat gets updated, I'll update the request list and we'll get into these stocks. So we're going to talk first about MongoDB. They had a terrific day yesterday. They announced their earnings on Monday after the market closed. They had good growth. They had good profitability. Now, I looked at their earnings, and I think the earnings were good, but they weren't like incredible. They were good. When we look at their growth in the quarter, 18.69, and that was good growth. They're not the biggest software company you've ever come across. Mongo provides database software. They provide it in a software as a service model. They're a newer software company compared to, I'll call them established or legacy database companies. And they've gotten to a size of $2 billion in revenue. Looking at what they announced in the quarter, they grew by 18.69. They did beat on expectations. They do have good profitability, but it's not great. Their gross margins are 71, but they don't have a profit margin right now. Not a big deal. They can eventually get there as they get bigger. So that's going to kind of take care of itself. They have good free cash flow at 15% free cash flow margin. So overall, this is a desirable business, but it's not quite as incredible as some other businesses in their space. Palantir is a good example of a high growth company, high margins, high profits. That one's just booming. And this one here is doing well. It's doing well. I just didn't see what was so incredible about the earnings to then see the stock go up 22%. As I speak, analysts believe that the stock is now fairly priced with just a 1% discount. If you look at the average price targets that we see out there, looking at what we should expect going forward, we're in the year they call fiscal year 2026 that ends January 31st. So we're in their fourth quarter, the fourth quarter of their fiscal year. And we're expecting that this quarter, they're going to grow by 15%. So this is where, again, I'm looking at a business. They're not accelerating growth. Okay. Now I can understand that the percentage of growth is the percentage number is going down because what you're comparing to these numbers, as they get bigger, your percentage growth goes down because you're getting bigger. Good news is you're overall a larger enterprise, and that's good. What would be impressive is if they were accelerating their growth, if they were like going from 18 to 20, 22, and that's not the case here. And I also see that in 4 quarters, it's forecasted that they're only going to grow by 9%. So as I look at this forecast, I'm not completely certain that, or bought in or enthusiastic about like, well, what did the market see that it really loved? As we look at the annual forecast, their profitability is going to expand. That looks good. And their PE ratio right now, it's high and it's going to come down. But in 3 years, it's still going to be at 63. And I showed you that they're going to kind of have a up and down kind of growth rate. So that was interesting to see that the market really did like what Mongo had to announce. And I'm looking at the fundamentals, not sure that I completely agree and believe in it. So the balance sheet's in great shape. We're good there. On the metric side, they're growing well, but not great. They do most of their business in the Americas, and then they sell into Europe, Middle East, Africa, and then Asia Pacific. All right. They continue to spend in research and development as they should. They're a software company. All right. So MongoDB, I did a full valuation on them. It should be updated. I'll share that with you, and then we'll turn our attention over to Daryl's screen, who could look at the technical analysis. And I think the stock's priced 25% too high. I'm giving them, or I should say, I'm putting in the metrics and the numbers that apply. This is a good business. They have a lot of cash on the balance sheet with no debt. So the discount rate is going to be 7.5. And that's a discount rate I'll apply to the forecast of cash flows that I expect from the business. And this is my best forecast for their cash flow going forward. And they're growing at actually less than 18%, but I'll go with 18%. Also give them a higher long-term growth rate. Usually it's 4%. If it's a really mature industry, 3.5%, 3%, just above inflation. But since I do think that they have a lot of addressable market and our need for data as continues to grow and grow, go by 5%. So my forecast is here of their cash flow for the next 4 years and then terminal, which is everything beyond year 4. And the present value of all that cash in the future is 26.9 billion. I add cash. I don't have any debt to decrement. So I get the 29.2 billion, but the market cap's 32.7. So it's priced 11% too high when I look at the value of MongoDB and compare it to its stock price. On the earnings per share, I give them a 36. It's as high as I'm willing to go. They're growing in the teens. Congratulations. I can buy a lot of software stocks that are growing close to what you're growing for a less expensive PE ratio. So I'm not going to go overboard on the PE ratio. I'm going to give them the growth rate that they deserve, and it's really priced high. So overall, this is a sell for me. It's priced too high. And there's really good choices in software. It's like going to buy a car and your favorite brand is BMW, but the Mercedes dealer's got really good deals, and the Lexus dealer is really just selling cars at really good prices with great terms. Pretty soon you drive away in a Lexus thinking, I'm saving a lot of money and I'm getting a great car. So it's similar with stocks. in the software space, there are great deals right now. No need to overpay for a software company right now because there's a lot of good ones to buy. So I'm going to turn it over to Daryl to look at the technicals on this company. And I think you need to share your screen, Daryl.
Will do. I'm sorry for that.
No problem. It's our first run through. There we go. And you are live, sir.
Yeah, we'll just show the intraday over the last 5 days using 15-minute bars. So the market seemed to be pretty exuberant after the earnings and ran the price up to about 419, but you can see that it waned throughout the day. So let me pull this 1-year chart back up. And the reason I went to the intraday, I was just looking at this candle right here, and this candle told me that's what happened, but I just wanted to show you the actual intraday chart, but this one kind of confirmed that's what happened. So I was working on this chart while you were speaking. They had been on basically a downtrend since the 200-day topped out here on around March 2024. So I've connected a downtrend line to that high, connected to this high, and connected to this high. Their last earnings, it looked like they broke out above that. So that was good news. That broke this downtrend. Then beginning in April at the tariff lows, we have an uptrend that they've been able to maintain. That one is much shorter than this one here. So now that you've got the big picture in mind, let's step down to just 1 year. The previous resistance would have been this high from probably their last well, it couldn't have been last earnings because that was 3 November. So they're high on 3 November, and I've just drawn that red line across there. They did break out above that. Given the activity and the selling off throughout the day, or less buyers, I would say, I don't expect them to maintain above this, but they are trading above it was a downward sloping 21-day EMA. It has turned upwards with this activity yesterday. The 50-day had tried to roll over and was flattening out, but they're trading well above that. So they are up 20% above their 50-day, and they are 64% above their 200-day. So these moving averages act like gravity. So whenever you get this far extended above a 200-day, or just any time you're extended above an average, and I can say Google is in the same exact position right now. They are very extended above their moving averages. So Mongo is too right now. I don't expect this price to hold here. I definitely would not be buying it here.
Yeah, and Mongo, just real quick, if I look at the 5-year on Mongo, it's had really nice rallies and it's had really bad sell-offs. And so here we are, we're rallying higher rather than quickly. And, history may repeat itself or rhyme. I would expect at some point it's going to sell off. Some profit taking might happen.
Well, let's talk about that a little bit more. So this is a black candle, which means it opened higher and then closed lower. Let's go look at this black candle right here. So they announced earnings and they shot up higher and ended up closing lower. Now look what happened for probably a month afterwards. So I'm expecting somewhat of a similar situation here. That is different than this candle here, where they opened at about 282, and throughout the day there was buying, and they closed at 296, which led me to believe, or would have led me to believe, that there were still buyers in the queue. And the next day, that's exactly what happened. More buyers came in. It opened up higher and drove higher throughout the day. That's different than these black candles that I'm seeing here. But even when we did get this 3 or 4 day run, you can then see what happened is for 2 months, it basically, well, let's back that up a little bit, because it did run up into the earnings. So I'll just take that to about right there. So it was probably 7 weeks after this 3 or 4 days that it just traded sideways. They did start, well, that's not into earnings. So I don't know what happened here. I don't know what kind of news there was. But anyway, you can see that we traded sideways basically for 3 months. Keep that in mind. We did have a little bit of buying in here, but it pretty much sold off back to this line. So anyway, I'm not expecting it. I don't expect it to keep rising from here. I expect it to pull back, probably to these levels right around here, 341 or so.
Yeah.
That's right around the 50-day moving average.
The one thing I would say is the rally in Mongo, it does kind of add a little bit of fuel to the enthusiasm for software stocks, because they were the first one to announce of the week, software stocks. And so if investors are, buying into software, that's going to be a good thing for the other software companies, I would think. We have a question, if you're ready for a question, from Paul. And this one's aimed, I think, for you. Hi, Daryl. From a technical standpoint, is there anything suggesting that SPY might be positioned for a significant pullback? Should we be cautious, or maybe hold more cash? And he followed up with another comment, which was jobs data report may open up a red dam. So any comments on the SPY, sir?
Looks like we're holding in, and we're holding support, which is this red line. We had that on October the 10th, and then again on November the 20th. We've tested it twice. We do still have a rising 5-day. The 20-day is declining. We are extended above the 200-day moving average. We are trading above the 50-day moving average. So I don't see necessarily a big pullback, but I would be cautious at least through next Friday or so, because there's a lot of stuff going on with mutual funds. That's pretty typical in these first 2 weeks of December.
And give me a little more detail on what that stuff is. Is it a rebalancing of portfolios, some buying and selling, or what are you referring to?
Yeah, and they have to make distributions.
Dividends and stuff like that?
Yes, stuff like that towards the end of the year. So it seems to happen every year during the first couple of weeks, and then things settle. Usually the last 2 weeks we have some positive activity.
Got it.
So
okay.
I did watch another gentleman yesterday who I have a lot of respect for, and he is really cautious right now. So maybe I can post the video that he did yesterday because I have a lot of respect for him.
Sure.
But I don't see the same things that he's necessarily seen. I'm not nearly as cautious or pessimistic over the short term as he appeared to be in the video yesterday.
Yeah, and there's some perma bears or there are some, I guess, some voices out there in the overall stock market, I guess, crowd. And some of these voices, they go on general media like CNBC, and and it seems like they just constantly are coming back and like Chicken Little talking about how, hey, we're really setting up for a big fall. And here's why. And then the following year, it didn't happen. So then the following year, no, this year, really, we're setting up for a big fall. And they just keep coming back to that. We're setting up for a big fall. Now, every once in a while, like every 10 years, they're right. Like you have 2022 is a pretty good pullback. So they probably stood up tall and said, oh, see, I told you guys. But they say it every year. So your chances of being right are 100% if you keep saying it. Eventually, you're going to be right. So now, have I been hearing those voices a whole lot this year? No, I can't say that. Now, do I pay a lot of attention to those suggestions? Not really. When economists especially are looking at the big picture and saying, well, you know, all these things could happen, it's they might be right, they may be wrong, but frankly, it's not really useful. What's useful to me is, can I buy Nvidia stock at a really good discount and can I make 35% appreciation in 2026 on Nvidia? That's the answer. That's the answer I'm looking for. That's the research I do. I'm very specific on I can make money when the market's going down, I can make money when the market's going up. And my job's to make money. It's not to predict the economy. That's somebody else's job and not one that I could make a whole lot of money in. So I'll leave it up to somebody else. Were you going to share something else, Daryl?
Yeah, this is the VIX, so this measures, fear in the market, and what we can see is a general uptrend in the VIX. It's not horrible, but look at the 50 period average on the VIX. It's definitely increasing, but we're in a pretty comfortable position. We're below 17, and we're definitely below 20, where things start getting a little wild and crazy if you look back over history during these
Right.
times. So we're below that line, and we are trading below 17 right now, which
Mhm.
doesn't indicate a lot of uncertainty or fear in the market. I just expect it to be volatile over the next couple of weeks. I mean, that's my
Well,
premise for the rest of the year.
welcome to stock investing.
Yeah.
Enjoy your journey. The one thing I would say on this topic is, like, I could list out the positives and I could list out the negatives, meaning what could make the market go higher? What are factors that generally are going to move the market higher? What factors would move the market lower? So, factors that will move the market higher. Interest rates, they are going down. Now, I'm not an economist in saying that. I'm a very practical observer. We have a president that wants lower interest rates. He's going to put a Fed chairman in the leadership spot of the Federal Reserve. And I believe that person is going to take over in May. So the whole attitude toward lower interest rates is going to be there. Lower interest rates is generally a very good thing for stocks and assets. Asset prices will go up. So that's one thing. The economy. The economy is okay. Are we setting any records? Nope. Is the consumer buying? Yes, their consumers buying. Are certain spots of the economy, troubled? Yes. Is that the case every year? Absolutely. Some spots of the economy are troubled. So unemployment's not an issue right now. I think that you could always show job losses every single year. There's always a company industry that's shedding off employees. And we're seeing an efficiency gain, which I think is going to help profitability. If we look at, AI and technology and other advances, they're making companies more profitable. If companies are more profitable, their valuations will increase. And that makes the owners of those businesses wealthier. Owners are stockholders, us. So I'm seeing some factors that generally for the next 2 years, I think the market's going to go higher. When I look at the potential risks, like what are some negative things that could happen? Now, I can't point to, well, there's a conflict. Like, do we have a conflict with China right now? Now we have what I'm going to call is natural tension between two big countries, two big powers. That's natural tension. That's not going to go away. It's just going to stay. And the encouraging thing is it seems like the US and China are communicating. US president agreed to visit China. So if anything, the China-US relationship seems to be on a good, place, at a good place. It may even get even better next year. There may be a reduction in the limitations of trade. And if that could really open up markets for NVIDIA and other technology companies, drug companies and stuff, and industrial companies as well. Farmers will probably see better buys of soybeans and stuff like that. So the negatives that I'm kind of seeing out there, not a lot of them. And, I could be surprised and we can turn the corner. Like COVID was unforeseen for me, and that really shook up the market, but it ended up causing a big dip, followed by a huge rise, followed by an appreciation of stocks that were going to do well during that period. So that's what I'm thinking. Back to you, Daryl.
So Paul mentioned jobs data report. I presume, Paul, you're referring to the ADP employment change report. And normally I post these in the Discord as soon as they're released, but I was running a little bit behind today. But I do see they were expecting 10,000 jobs. Looks like the previous was adjusted. I think it was adjusted from 42, so they may have added a few more jobs at the last report than they originally thought. But this report, the jobs were down 32K. So I think that's probably the report. I don't see any other jobs report that's coming out today. So I suspect that's the one you're referring to. And I just wanted to bring it up so everyone else could see that as well.
Yeah. Thank you. Okay. So the market has opened. The NASDAQ's down. The S&P's down a little bit. And it looks like we have some of these big caps, NVIDIA, Broadcom, Microsoft, Amazon are selling off. That's what's probably moving down the index. Apple is standing up tall, and Apple's been on a pretty good little win streak for the last couple weeks. They've hit an all-time high. So good for Apple. Tesla's up. The software space, we've been talking about it. I'm seeing some green. And look at Uber. What's going on? 3.8% higher. That's a pretty good day. Staples are up, so a little bit of risk-off behavior. What's interesting this week alone, yesterday I bought more shares of Procter & Gamble, Colgate-Palmolive, because the stocks were really beaten down yesterday. Well, the following day, it's up 1.5. So that looks good. Energy is up because oil prices are higher. And the healthcare space looks predominantly green. Got some green spots. Pfizer's up. Looks like United Health is up a little bit. Merck is up nicely. I've been seeing Merck do quite well on several occasions. Consumer discretionary is doing well. Home Depot's up. McDonald's is up. And financials is gone higher. I released a video to advanced members covering the best and worst financials companies. So I covered a lot of these stocks, and some of these stocks are priced really well. And I think our opportunity, and some of them are just priced too high, and some are in between. But watch that video if you're an advanced member. I think you'll find a couple of ideas that are worth considering as we go into 2026. There's one that I'm probably going to take action on and buy into. I'm going to think about it and maybe start a position today, maybe start a position tomorrow. And then telecom is up.
Let's take a quick look at the Uber chart.
Yeah. What's going on in Uberland?
So we had drawn this trend line quite a while ago,
Mm-hmm.
and they broke down through that trend line. Then they found a little bit of support right at the long-term support line. They were trading above it. So I upped my Uber shares about 40% over about 3 or 4 days here. And today they are going to open, or they're actually trading above this trend line again and trading above the 20-day. So if they can hold this, today's Wednesday, if they can hold this through Friday, then they'll be definitely back on trend.
Nice. Well, I'm very positive on Uber. It's one of my big positions. I think it's number 5 on my portfolio, representing probably about 4%, a 4 or 5% position in my portfolio. And I just think their growth is great, and their ability to take advantage of some of these advancements in the industry are right there for them. And I have the stock highly discounted. The stock is discounted, and I'll show my valuation. So the stock's discounted by 61%. Uber generates a lot of cash. And let's just think about it. If Uber wants to put 5,000 more drivers in the Chicagoland area, they could basically, recruit more drivers. They don't have to buy any cars, and they don't have to kick out any paychecks. It's all gig pay, right? So they're paying as the person delivers a service that's billed to the customer, and Uber gets that cash, and then they pay the driver. That's a very low capital intensive growth business. They don't have to put capital to work. Some of these businesses, as we're seeing with AI as an example, somebody decides, hey, let's build a large language model. You're Meta. You're like, hey, let's build a large language model. Let's do it. Let's put $75 billion into GPUs, data centers, all this capital. And eventually in 2, 3, 4, 5, 6 years, we will make money. Well, you're putting capital out there. The capital for a few years is not going to perform. Your return on invested capital, that metric's going to take a hit. And then investors are not going to like it. Meta stock sold off. Now, Uber, back to Chicagoland example, they could put 5,000 more drivers in the month of December, maybe a lot of holiday parties and people going out to dinner, enjoying a few cocktails and avoiding getting behind the wheel. Great. They could put 5,000 more drivers of capacity with not having to buy one car, not having to employ one person. They qualify people in. Those people come in as a pseudo contractor. that is going to be paid, for the gigs they perform. And voila, Uber is off to the races. So they have very good revenue growth, and they're able to drive so much cash that their cash pile just keeps loading up. And I'm seeing that Uber is going to continue to grow. I think in the US and around the world, Uber has become a transportation mode. You can avoid buying a car, and cars are expensive, man. Cars have gotten really expensive. Car insurance is expensive. Gasoline is expensive. Maintenance is expensive. So a lot of people are like, I don't want a car. I'll Uber, take the subway, take the bus, walk, ride an e-bike. You're seeing a lot of alternatives to owning a car. It doesn't bode well for the car business, but bodes well for Uber. Because let's say you are like, hey, I'm going to ride my e-bike most of the time. I'm going to ride to work and so forth. But maybe it's raining and you're like, okay, today I'm going to take an Uber because it's raining. I'm not going to ride my e-bike in the rain and stuff like that. Or maybe you're going to go out to a get together that's going to end at 1 a.m. Well, I don't want to walk the streets at 1 a.m. I'm going to take an Uber. So Uber is one of those really desirable businesses in my portfolio. Those are the reasons for it. It's good to see the charts are setting up well. All right, let's keep things moving. We are going to look at Genmab. Genmab came up in the live stream yesterday. It's come up on investor calls, live streams. The stock's been on a fantastic ride. Really nice appreciation path. For the last 5 months, it's gone from $20 a share up to $31. So if you own Genmab, congratulations. Good job for picking up this really good business. Now, Genmab is not like a kind of a hard to analyze stock, a hard to figure out stock. I tend to think it's kind of easy. Here's why. P ratio at 22. And as I'll show you, these guys are growing. So you're like, okay, 22 isn't a bad PE ratio for a growth company. Analysts are telling me it's discounted. Okay, that looks good. Now let's take a look at their growth. And this is where I'm like really impressed and really like the company. They have established an acceleration in their business. And the growth in the quarter that they announced September 30th, that they closed on September 30th, they announced it, I think at the beginning of November, they accelerated their growth from 18.7 up to 23. Very good. Now, when we look at their margins, super impressed. 94% gross margins, 41% profit margin. That is impressive, folks. Free cash flow margin, 34.5. So if I had, let's say I had a vending machine business and I had a 34% gross margin, I would sell everything that I had that I could sell and buy more vending machines and just dedicate myself to that business because that's an awesome margin. I think Warren Buffett would probably invest in my vending machine business that yielded a 34% cash flow margin. That is a completely make-believe example. Back to Genmab. This is a real business that's cranking out this kind of cash. Now, a very good question on the stream came up. It said, yeah, but what about their patents? When are they going to expire? I'm going to show you what our friends over at Gemini. I consider Gemini a friend because I own the Google stock. It's my number one position. And it gave me a really good answer yesterday. Hopefully it's 2 for 2. Here we go. So the revenue decline is predicted to start 2030. So we're about 4 years from that happening. So it's not immediate. They're going to start losing some of their share in 2029. So that was the first answer that, hey, their patents are expiring 3 years from now. Good to know. Got to be aware of that, because this shouldn't be a stock where, hey, I'm going to invest and own it for the next 20 years. Maybe you do. Maybe you do end up owning it for 20 years. But you got to be aware of events like their patents expiring. Now, when we look at their forecasts, analysts do like the stock. It's been rallying higher. And the general forecast for the annual forecast, and we've got a good number of analysts putting their research in the mix, is that they're going to keep growing. And we see that their growth is going to persist. They have that really profitable business. So I'm just seeing a lot of gravy here. I'm seeing a lot of profit, a lot of cash. I'm seeing their PE ratio really coming down. I don't think these numbers are right. That's too low, but you get the picture. The growth is really good. And when I do my own research and valuation on Genmab, it looks terrific. So it's been in rally mode. It's got great numbers. It's got momentum. Patent cliff isn't a big threat. So the question I answered earlier, and who was it that asked that question? Put me on the spot. Magical Self. If I only had enough money to buy one of these stocks, which one would it be? Genmab. This is the one. I've just seen too many good things to pick any other. I'm not selling my United Therapeutics stock. I will own that. Love the company. Not quite ready to buy Okta, but I would be in buy position for Genmab. What do you think about Genmab, Daryl?
I'm building a position here as well. So we'll take a look at a 3-year chart or so, and we'll attach some downtrend lines, because they have been in a downtrend since they reached their high back at the end of 2022. So I see a few trend lines here, one connecting this point, one connecting this point, and then touched it again here. They have broken out above that trend line, so that's really good news. And we also had this downtrend, which is connected here, and they have broken out above that. They had a little head fake here, dropped back below it, and then they've been off to the races on that trend line for a while. Then I have this upper trend line where it's faced a little bit of resistance, and we'll zoom in here a little bit now. And so that's resistance right now. They did come up pretty close to it and try to test it. But let me show you this candle right here, this red one right here. When you're in an uptrend like this, and then you get a sell-off where the body encapsulates the entire body of the previous day, that's called a bearish engulfing pattern. And you can expect sell-off over the next 3 or 4 days. And that's pretty much exactly what's happened, but it's still above the 21-day EMA, barely below the 5-day EMA, which, whoops, that's not what I wanted to do, which is still rising. The 50-day is rising, the 21-day is rising. They pretty much held the 40 RSI here. They did rally up to the 70 line. They pulled back to the 60, and it seems to be holding there. It's right around the 60 RSI. So I don't think this is a last 3 days. I don't think this is going to be long lasting. The one thing that's really nice on this chart is I'm looking at 2 years worth of data, And look at this accumulation, despite the fact that it was selling off, just kept going up. And we're at a 2-year high on accumulation right now. So somebody is definitely buying this stock even when it was going down. We can confirm by looking at the money flow, you can see that it spends most of its time in bullish territory. So money is coming into this stock.
Well, members of this community, and mostly, members that go on the member calls, they've been bringing this stock up for 6 months. So shout out to the community. Your spidey senses for smelling whether it's money, your senses were on Genmab. I did not buy shares. I'm glad that Daryl's in it. I'm probably going to buy shares because this checks all the boxes for me. It's in healthcare. Healthcare has been performing really better. I'm not going to say great because it's had kind of a tough couple of years, but it's really going up nicely. Anything else on Genmab?
Nope, not right now.
All right, so we have our first super chat of the stream. Looks like Shamba Basher wants to look at forklifts. Glad to do that. We're going to look at Hyster Yale. And you guys, wow, look at the stocks really rallying higher. Whew, let's take a look. I looked at this stock in the past. It's an industrial stock. They make equipment. I predominantly know them for their warehouse equipment, but it looks like they do other heavy equipment that you'll find in farms and so forth. And let's take a peek at their website real quick. So this is what I know them as being, right? This is a piece of equipment at a port, a warehouse. I mean, I'm sure somebody's working on a robot that's it's going to go grab pallets and move them from Bay 27 over to the pick, pack, and ship area and all that good stuff. But for now, I mean, these warehouses with Amazon and everybody, selling so much stuff online, they're pretty active. And I don't think it's going to slow down. So this business is a small cap, 552 million. Year to date, it's been selling off. Now, this has been selling off, but the whole economy around warehouses, I've only observed that it's just getting bigger, right? Everybody has a big warehouse now, and they are in a mode of being able to ship their product. Whether you're a retailer, for example, my lovely wife, she runs the procurement organization here at the household, and she saw these really good deals that Kohl's, which is a retailer, had on Black Friday. So she ordered a bunch of gifts for the little kids in our family, got a good number of them. And I'm glad she did so, and she got all these really good deals. So that's a retailer, and all that product was sent probably from their warehouse. So that whole activity is going to drive more demand for Hyster Yale, for them to have more forklifts, more handling equipment to be available. So this is a small cap. This caught my attention. I did some research around industrials, and this one stood up a little tall. Let's keep going. Revenue's almost $4 billion. So you're paying a fraction of revenue for the business. P ratio is high, not representing a forward PE. Dividend, 4.6%. That's a pretty high dividend. The stock's beaten down, 5-year, beaten down. Why is it so beaten down? Why is this market beaten down Hyster Yale? What did it do to the stock market to deserve that kind of beat down? Well, if you start contracting, you get beat up. You get sold off. So we were growing single digit. It may have been a little bit of good old COVID strikes again. So during COVID, of course, employers sent employees home. Hey, go home. We're not allowed to have employees come to the warehouse, come to wherever. And it disrupted supply chains. And that disruption came back, and businesses had to catch up. They probably overdid it. They bought too much equipment in these years, and it pulled forward demand. That pull forward is now what they're dealing with. Nobody wants to buy our forklifts. Why? Because they bought too many of them in 2023, 2024. Now they don't need any in 2025. Makes sense. Those forklifts wear out. They get used, abused. They get used every single day for 12 to 14 hours a day. So eventually they're going to wear out. They're going to break. They're going to become hazardous to some extent. Or maybe the maintenance cost is too high and it's cheaper to get more equipment, lease it out or buy it so that you can avoid that maintenance cost. So this, I think, is improving. You see that the September number was better. They didn't contract as much. And the compare on September was against a pretty high number. Historically, this business, before COVID, I like looking at numbers before COVID. It kind of gives me a natural representation of the business. They were north of 3 billion. Now they're north of 4 billion. And they've contracted. So they've contracted closer to their historic revenue line. Okay, so the quarterly is showing me the reasons why the stock's being hammered. But we're not going to look through the rear view mirror exclusively. That's not what I do when I drive. 99% of the time, I'm looking through the windshield. What's ahead of us with this stock? Are they going to grow? Are they going to do better? Good thing about them is they're profitable. That's good. And let's look at their forecast. See, no analysts are giving any love and attention to Hyster, but a few of them are putting their analysis out there. So we've got, in the year we are operating in, we're seeing the contraction. The contraction is going to extend into 2026. Let's look at the quarterly. But we're going to see growth in some quarters. This might be an opportunity knocking on our door. Once they start growing, I think this business is going to do well. I think this is a interesting stock. It could be a nice little opportunity because once we see this growth, I think investors are going to perk up. I also like that dividend they're paying. And let me take a look at their balance sheet. Double check to see if they have a lot of debt. So they have some debt, have some cash, about $393 net $1 million of debt. So they're right at the limit there, 3.22. That's a little high, but it's not hazardous. It's just high. So I'll keep that in mind. So I have a valuation on Hyster Yale. At least I had it historically, but it's a little dated. So why don't I flip it over to you to look at the charts, if we could, and then I'm going to update my valuation on Hyster Yale while you show the charts.
Okay, so they've been in a confirmed downtrend since August of 2024. Got it connected to the high here. It touched here, and they're trading well below that at this point. I've got a resistance line set at about 33. That was the low in April in the tariff announcements, and they have broken down below the tariff lows and are trying to recover. We have a 50-day that's down sloping and also touching that resistance line. The 5-day is increasing. So basically, I'm not expecting the price to get much above 33. They're trading at 30 right now. Right above that is the downtrend line. That would be at 34. Then we have another resistance line here, which coincides with the 200-day. So my absolute maximum price probably within the next 2 or 3 months would be 39, but the more likely price would be about 32. So you've got about 6 or 7% upside. The RSI did move into bullish territory, but since this high here, you can see that they have struggled to get above an RSI of 60. So they really need to break above that 60 line to really have some positive momentum. And I have not seen that since the price was driving higher back here at the beginning of end of 2023 into 2024, and we had a short burst here in May of 2024. But since that time, they're struggling to get an RSI above 60. So that also tells me that since we're already above 50, that if they can't break out above 60, they're going to stall out probably in this area, if I was guessing. They do have a bearish PPO, but they did have a bullish crossover from a very low threshold. In fact, it's the lowest threshold we see over this 2-year period. The accumulation has also been downsloping since this area right here. There's definitely been a sell-off. So unlike the one we looked at previously, where the accumulation has been building during the sell-off, this one has actually had distribution. You can see most of the time it is spent money flow in negative territory. So I don't have much hope for this one. Max upside I see here in the next month or two would be about 33. The absolute highest would be about 38. Hopefully
Thanks,
I'm
Carol.
wrong if you're buying this.
Well, this one's a tricky one. So they have some debt on the balance sheet. They're a very small cap, riskier. Okay. So I'm going to go with a 9% discount rate. A good quality, well-known name would be 7.5. A superb company would be 7, but a 9 is appropriate for Hyster Yale. And when I use that as the discount rate, and this is their cash flow growing at 4% per year, which is rational. It's a 14% discount based on cash. Now, on earnings per share, I'm actually using the earnings per share for 2027 because they're expected to lose money in 26. So even when I use that number, I get a stock price is 15% too high. So overall, 5% discount. Does that make me spring up and take action? No. It's a small cap. It's just too much risk without enough compelling discount for me to buy in. Now, if these fundamentals change, my attitude would change, or if the stock price continues to go down, might be a good opportunity. One thing that investors might like is that dividend. That dividend is nice and chunky, over 4%. And they can't afford the dividend. They're generating very good cash, okay? And they've been raising their dividend. So it's a pretty decent dividend. It's just a risky stock. 4.64 is a good dividend. I'm just not seeing a giant discount available on the stock, and the stock is proven to be really just getting beat up, and I don't know that it's going to go higher. So it would be a sell for me. It would not be a buy. Dividends are great, but Not if I'm taking too much risk. If I'm going to take risk, I'd rather buy the next Robinhood, the next Palantir, the next NVIDIA, and then my money can go 10x, 5x. That's where I want to take chances, not to earn a dividend. If I'm going to earn a dividend, I could buy a bond and do about 5% and not take any risk. So thanks for asking, Shamba, about Hyster Yale. Appreciate the super chat. And looks like Mike, the dividend investor guy. Good morning. Any update on Joby? Well, put it on the list. Joby, I think, is the aerospace company, right? Where you can fetch a helicopter ride, or EV or electric helicopters is what they produce. Well, take a look at that, Mike. It's on the list. We got a good number of stocks ahead of it. Let's turn our attention to RTX. It's a stock that Daryl wanted to take a look at, and we had a comment earlier on the stream that with Russia and Ukraine maybe having a little bit of an argument as they try to form a peace treaty, that probably creates a little more higher expectation for defense products. And this one here has been doing great this year. It's done great over the 5-year. Now, aerospace and defense for a while was kind of just a non-performing class of stocks. But now, boy, that's really changed, huh? Dividend, not really high, 1.62. This stock for the 1 year, as mentioned, up nicely. It's become a $225 billion market cap. I released a video to paid members on the best and worst aerospace companies. RTX was in there, and it'll go public, I think, in a week or two. So look for that video if you're interested. And I took like the 10 most valuable market caps in aerospace and defense and went through a process of valuing them and so forth. So look for that video to come out. When we look at their growth, good growth in the full year 2024. Quarterly, the growth persists. As of the last quarter, they announced almost 12%. This is a big company, so those are good growth percentages. The profitability of aerospace it's not my favorite industry because their gross margins are low. They tend to be on government contracts that are cost plus, and it really manages profitability, or I should say limits profitability. But these guys do crank out a profit margin, and they have a fairly stable backlog of business where you have the U.S. government saying, hey, we're going to need 1,000 airplanes of this type over the next 10 years. That's a pretty solid forecast. So that's why investors like these stocks, is you have a very reliable source of revenue. You have a reliable business. Up until the last couple of years where we've had conflict and I think some changes to the way that in Europe, as an example, countries are going to have to build up their militaries to have the ability to defend themselves. And I think that created more demand. So overall, profitability is okay. For aerospace, this is just what it is. Analyst. Let's see here. Got 13 analysts covering it. They think it's a decent buy with a 4% discount. Now, the dividend isn't very high, so it's not like you're getting a nice income stock. When we look at the forecast, next year they're going to keep growing. Single digit looks good. Profits are going to expand and bring down their PE ratio to the low 20s. Okay, so good number of analysts are looking for that. And the next quarter they're going to report will be this one. They'll probably report it in early February or late January. and they're supposed to grow by about 6%. So this one's going to be a steady Eddie stock, not a stock that I'd be me. I like tech, I like communication services. Talked about Uber. Those are the spaces that I really like to play in. Aerospace and defense is not my cup of tea. I don't have any aerospace and defense stocks, and I don't want to force myself into one because I'll probably just buy the wrong thing. I'll just sit it out, and I do buy some bonds with aerospace companies because I think they're very good businesses that will pay their debt. So let me look at their valuation, and just Daryl, just to let you know, it looks like your image is blurry. You might want to work on that.
Okay.
I'll show you the valuation on RTX. Yeah, RTX, in my opinion, when I weigh the value of their cash flows that I expect in the future, and I look at the profits I expect in the future, it's priced 24% too high. I'd rather just not buy. If there's no dividend, compelling dividend there, will we stay in this need for governments to build out their military? Maybe. Not my area of expertise. I'll let somebody else make that determination. But if Russia and Ukraine figure things out, if we don't go to war with Venezuela, and I'm not saying that that's all, going to happen, but I know that there's a significant amount of tension between Venezuela and the U.S. If those things kind of the temperature cools on those situations, I don't know that aerospace is going to flourish like it's flourished for the last 2 years. But let me turn it over to Daryl. He might have more insight into aerospace as well as RTX. The floor is yours, sir.
Okay, so we looked at this one a couple of months ago, and this one's pretty consistent as far as the price action. So I'm going to adjust this trend channel here. I'm going to take this line because we looked at it a couple months ago and haven't updated it since. And I'm just going to drag it out a little bit. So I'm going to connect it to this red candle right here. We did drop below it a little bit. And then I'll extend this line out as well. It's currently touching this point right here. So I'm just going to drag it out, trying to keep that point connected. So, and then I'll save this here. So if you're an investor in RTX and you like RTX, the 50-day line, which is this lighter blue color, not the trend line, but the line right under it, the blue line, that's the 50-day. Look how many times it tests that 50-day and bounces off. So here, here, here. Whoop, it actually dropped below it. So right here, dropped a little bit below it there, barely, just for a couple of days, and then it's right back up. Tested the 50-day here and actually dropped down below the trend channel. They had their earnings and shot up to the upper end of the trend channel, overshot, and have drifted back down to the 50-day moving average again. So I bought shares yesterday, I think it was. Yeah, I think it was yesterday when it hit the 50-day line, because I had trimmed it several times. I've traded this one on and off just because you do see this up and down movement within this channel. So I just buy at the or sell at the upper end of the channel and buy at the lower end of the channel, just trading this one as it's been going up. So just wanted to point that out because I saw it on the chart when I was reviewing over the weekend that it had touched the 50-day line. So I think some people had asked, when do you buy these? In either the Discord or one of the previous videos that we did. This is why I use technicals, because it tells me when is a good time to buy, when's a good time to get out. And when I say get out, I never get out completely unless I lose faith in the company. I trim. So I'll trim maybe 20% of it and buy that 20% back here. You do that enough times over time, you really boost your returns.
Excellent. Thank you, Daryl. And while you were looking at that, I was curious to kind of ask Gemini, hey, what's the forecast for defense spending around the world? And the current spend is pretty high, an increase of 9.4 from 2023. And that was reported for 2024. Near term for 2025, it's 3.6%, which is, that number is, I'm going to call it what I would expect or typical. And so this gives me a number, but doesn't give me a good sense of it. So the spend going forward, right, is that we're going to have 3.6% growth. So it's a reliable industry. My overall impression is that a lot of the gains in aerospace are behind us, and I don't know that the gains are ahead of us. I think they're behind us. But it's not a space that I invest in a whole lot. I'll leave it up to people that do invest to put their comments, and I would encourage you to listen to what they have to say about it. So that's RTX. All right, so let's take a look at Joby. Joby is kind of a similar company. Joby Aviation. Joby Aviation, a vertically integrated air mobility company, engages in building an electric vertical takeoff and landing aircraft. Okay, so here it is. All right, let's see this demo here. So these are going to be small aircraft, and I think those props will rotate, I would think, and enable you to take off vertically, which would then, you wouldn't need a runway, right? You could land on a rooftop of a building. You can land maybe in a field, that kind of thing. So that's their idea. Let's take a look at their stock. Year to date, winner, 72%. 1 year, same. 5 year, if you bought back here, it was a trail of tears as you saw your stock just get beat up. But then it went from $5 a share up to 14. So investors that bought at the right time are sitting on big gains, or they already took big profits. So looks like Mike has a small investment. So Mike, do you have your deposit down on your aircraft here to get your own personal aircraft? And so these guys, I would think they're going to potentially be kind of in an Uber-like ecosystem. But if they're the manufacturer, it's like being General Motors. You're involved in ride hailing, but you're making the car. That's not a great business to be in. But let's take a look at Joby from a fundamental review. $12.8 billion market cap. Financials, so not a lot of revenue. So we're in the idea phase of this business. They got some revenue. I wonder what that revenue is for. 22 million. So the revenue is tiny. I'll be curious to see their forecast in a bit. Now, I imagine they have cash on the balance sheet, excess cash, because they're going to need it. Yeah, they got about $1 billion. They only have a little bit of debt. So they have some cash to work with so they can take their idea, get to a point of selling their aircraft to the market. So here's their forecast. They're not going to be a big company anytime soon. Actually, they are going to have pretty good revenue growth here. So the current year, I think they're going to exceed this number. Next year, they're going to be about $42 million business. Again, this is like a $12 billion market cap company. So we're still paying a lot times sales for the company. And then from that number, they're going to grow really well. And then they're going to grow really well. Now, investors, I'm going to venture to say that when they start growing at these rates, investors are probably going to be excited about this kind of growth. And this stock may work, especially if they successfully get certified and are able to sell these. I think it's probably going to be a stock, if they do hit those growth numbers, that's going to grab a lot of investor attention. Now, I don't think I have good data to analyze their profitability and so forth. So I'm going to use what we just went over, RTX, because profit margins are negative 4,657. That's not a useful number. But instead, I would say RTX and other aerospace companies like Boeing and so forth, these are smaller gross margin businesses. They don't have big gross margins. They don't have big profits. And I think Joby is always going to have that ceiling of it's not going to be a big, giant, profitable company. We're not going to see the next GenMab with 94% gross margins and 41% profit margins. We're not going to see that with Joby. We're going to see like single digit net profit and so forth. And that's kind of a disqualifier for me, where I'm not going to invest to be a fan of the company, and I'll let somebody else invest. I could be a fan. Like I'm a big fan of Rocket Labs. I think I'm a fan of SpaceX. Rocket Labs is publicly traded, but I don't buy the stock because their fundamentals I'm not a fan of. I'm a fan of the company. I'm a fan of what they're doing. I would be a little concerned. I would probably not get into one of these aircraft. I see too many small aircraft accidents to be afraid. And but other people might be more comfortable with it. What do you think of Joby Aviation?
Well, Mike said it is a speculative investment, and I tend to agree with him. This was their high, if I understand it. I did look back a couple of years. I didn't go much past that, but it is the high at least over 5 years. Whoop! Don't want to go to 1 day. So basically, that's a line of resistance, 21. This is not a confirmed downtrend because you have a 200-day that's still increasing. So if I mistakenly say confirmed downtrend, you can remind me that it's not confirmed. But we do have a downtrend that started on the 4th of August. So we have the downtrend line connected here. So that'll also be a point of resistance moving to the upside. And then we have a much shorter downtrend here, which they've tested at least twice from that point. So that's also going to be some resistance. The 50-day has rolled over, so it is now declining, but the 200-day is still increasing. The 21-day is declining, and they're currently trading below that, and have been for at least 2 weeks. They came up and tested it, failed, and they're trying to do another test of that here pretty soon. But this looks like some pretty firm resistance at the moment. The RSI is only at 45. It's in bearish territory. The PPO is in bearish territory. Trying to have a bullish crossover here. I think it's going to struggle given this resistance point that has been tested several times. And you have multiple points of resistance in moving averages and this downtrend line. The money flow got positive for about a week after being negative for 4 weeks, and it's back in, I wouldn't say bearish territory because it's just slightly below zero. It really needs to be below this red line before it turns bearish. So it's kind of in no man's land at the moment. So I don't see much upside here in the short term.
Thank you, sir. That is Joby. And yeah, I mean, it's a company with a big idea, interesting idea. And if we watch the Jetsons, or at least when I was a little kid, I watched the Jetsons, and there was flying cars in that show. I was a fan of movies with depicting the future, and they have flying cars. So here we are, 2025, and we got Joby saying, hey, we want to have a flying vehicle that could be used to move people around. Now, Paul wanted to look at a company by the name of Camtek. These guys work within the semiconductor industry. They manufacture and sell equipment that helps businesses inspect semiconductors and find defects that should be called out and potentially take that semiconductor off, the availability line, and therefore avoid maybe having that semiconductor packaged and then fail in service. So that's what their product does. They're a small business, 5 billion, but man, their return has been phenomenal, 500% over the 5-year. These guys probably have started their business and really hit the market during an incredibly prosperous time for semiconductor, where you have so many semiconductors being produced and their products had good demand. Their growth has been good for the full year 2024, 36% growth. That looks good. The quarterly looks good, but the rate of growth has declined in the most recent quarter. So that decline is interesting, and I wonder if it showed up in the stock. Yeah, it showed up in the stock. Stock sold off. But we're back to go times, because it's expected that, semiconductors, the demand is going to be there for a while. The world is becoming more compute intensive. We have AI applications and experiences going out there. You got Meta glasses being sold. You have more use of data, applications, apps, and all that puts a bigger load on these systems. So these systems are going to need more compute, more semiconductors. So this company should see a growth for their in demand for their products. Analysts believe, 12 of them, that this stock has a tiny discount. And as we look at their forecast, the forecast for 26 doesn't look all that exciting. Kind of a year where they're just going to grow at 5.58, but then come back to start growing in the future. Their profits also going to slow down. It's going to be kind of a year where maybe the businesses that bought their equipment have what they need for a while, and they're going to need for another expansion cycle of foundries and stuff. And those foundries will need to order the products that these guys manufacture. Looking at their free cash flow, So the free cash flow for this business, they don't have cash flow. So they do have more cash than debt. Balance sheet's fine. But I would have thought that they'd have cash flow since they're doing so well. Let me double check that. So they had cash flow in Q2. So this business is coming out of Israel, so they may report every 6 months. And if I look at this point, they had $88.6 million of free cash flow. Based on the industry they're in, gross margins 50%, they are profitable. They'd probably be worth 180 to 300, 1.8 billion to 1.8 billion to 2.7 billion. And they have a little bit of excess cash. So they're priced way too high. They have really flourished in the semiconductor space. But I'm not overly excited about a company that's going to have 5% growth next year. What if we have a slowdown in semiconductor? That 5% can turn into a negative 5 or 10%. Then this stock is going to, it's shown that it's had its moments when it really got priced down. It's a small cap. So it can go from its current stock price down 30, 40% very quickly. This would be a high risk situation that isn't luring me in with growth. It's actually telling me that, hey, we're not going to have growth in 26. So I'd probably sit 26 out and see if they could start growing faster, maybe invest in a year or a year and a half. So it would be a pass or a sell in my book. What are you thinking about Camtek?
Well, this got some pretty drastic price shifts, so even over a year's time. So this would be a trading candidate for me. They do have an upward sloping 200, but they have spent quite a bit of time. Let's see, from February all the way to June, they spent under the 200 day, and they've tested it here. So I don't think another test of the 200 would be out of the question. Let me go back a few years. So they've been as high as 140 over 3 years. So I think this 129 that we see right here would be a point of resistance, but we do have at least a previous high of 140. So somewhere in that range from 129 to 140 is where I think it could probably trade into if this uptrend continues. The 21-day is moving upward now after declining. The 5-day is moving upward. The 50-day is still moving up, but that's facing a little bit of resistance here. It would be nice if it can break out above that 50-day, and that would be something to watch over tomorrow and Friday. And if it can get above that 50-day and hold it, it might be a good entry point. The RSI is bullish and the PPO is bearish, but we did have a bullish crossover. So those are two in the positive column, and it has managed to actually get into overbought territory. Some of these stocks are getting pushed back down at the 60 line, but the fact that it's been able to actually crawl above that is somewhat pretty good news. So it looks like a good entry point if it can hold above the 50 over the next couple of days.
Good to know. All right, so let's take a look at where stocks are moving here. Looks like NVIDIA is back to even. Microsoft is under some pressure. It looks like their growth numbers on their AI products, like the Copilot, they're just not there. And it's a few comments that I have come across is that customers are not seeing that Copilot is all that great. You know, like I'm using Gemini. I used it earlier to look at two things. One was the patent cliff for Genmab, and then second, look at the forecast for aerospace and defense or defense spend. And it was useful. Now, I think Copilot was a little bit sold as, well, if you're in Excel, you can tell your Copilot, hey, create a spreadsheet and make it have do this and that and macro here and this, that, and the other thing, VLOOKUP there. And it's fallen really short of executing those instructions. And I actually spoke with a technology leader. And this is probably 2 years ago, a year and a half ago. And he actually had a super negative experience with Microsoft Copilot because he said, okay, we bought it thinking, okay, we're going to be a little bit ahead of the curve. Our user population is going to be happy that we're giving them this tool. But what it actually created was a big dissatisfaction curve because they rolled it out. Then the information technology organization ended up getting a lot of calls like, hey, this thing isn't working. This thing stinks. It wasted a bunch of my time because I try to use it and I end up coming up empty across the board. I'm not going to use it. It's terrible. And he thought they're paying money for a burden, for a bunch of headaches. And he was really unhappy with that. Maybe they could have made sure that they were positioning it right, because I think a lot of customers are probably experiencing that. And I have tried to use AI to do certain tasks, and it usually falls way short because it gives me, it tries. If you're asking it for information, AI is solid. Tell me the presidents that were in office in the 1800s. Boom. Tell me this data. Boom. But once I ask it to do something, that's where the wheels fall off. And it's been hard. And that's where I think the whole play that, agentic AI is going to really just replace so many jobs, maybe, but 5 to 10 years. And, we'll see what happens. Netflix is down big. What is going on? Did Netflix do something with that acquisition, or that's probably related to the acquisition they're trying to make? Micron's down, Amazon's down, Tesla's up. United Healthcare up big today. Pfizer up nicely. Energy's still up. Good. All right. Okay, so let's move over and talk about a company that announced yesterday, which was CrowdStrike. Where is CrowdStrike stock trading? So it's down a little bit. Their earnings were solid. I think this one may be a little bit of what we were seeing weeks ago when earnings were coming in. They looked pretty darn good, but the market was selling the stocks off because I think the stock prices were too high. That might be the case with CrowdStrike. The market's like, whoa, hey, they did what they were supposed to do. They announced their earnings. They came in as expected. Nice growth to 22%. Profits there. Good metrics. Not quite profitable on the profit margin line, but they have very good gross margins. Free cash flow is good. But just this stock is too expensive to begin with. So the market is selling it off. 40 analysts cover it, and they think now it's priced 6% below its value. But some analysts are bearish on the stock, saying stock's only worth $343 per share. CrowdStrike is a fairly popular investment. The theme is we're going to need cybersecurity software, and that's absolutely a fact. These guys are going to continue to grow 22%, 22%, 20%, and their profits are going to expand, but their PE ratio is expensive, and it's going to stay expensive. And cybersecurity, in my opinion, it tends to be an industry where the best player 10 years ago is nowhere near the top. And the best player today is not going to be near the top in 10 years. Okay. It just has kind of who can handle the threats best in that era. And then the market moves on to the next company that figures out how to better protect companies, governments, individuals, and it moves on to the next cybersecurity company. So that's one thing that I would say. These revenue numbers can really change, and these things would change very quickly if a new player comes into the space that is proven to be better at protecting data, enterprises, systems, and so forth. I have a valuation on CrowdStrike. I updated it yesterday, and I'm going to state that it's just too expensive. And at the end of the day, CrowdStrike's a software business. They're in a category within software of cybersecurity that is expected to keep its demand for a long time. I agree with that. It's just they're not in a position to exclude competitors. Competitors can freely come in and try to prove we are better than CrowdStrike. And there's 10 cybersecurity stocks that are publicly traded. There's plenty of stocks to look at, which ones are discounted, which ones am I going to make money on. The last stock that was a big success in this space for me was Zscaler. Made good money on Zscaler, bought and sold at the right time. And CrowdStrike's not the right investment for me. It's just too expensive. And I can't make money on a stock that has a PE ratio above 100. And they're growing at 20%. That's not incredible growth. Incredible growth is 60, 80, 100, 120. That you can give me 100 PE all day long. I don't care. You're growing that fast. The PE ratio is irrelevant. Your growth is what I'm buying. And 20% growth is good, but not awesome. So those are my comments on CrowdStrike. What are the charts looking like for CrowdStrike?
I was looking at a chart over 3 years, and they do have a pretty good looking trend channel. They got way above that trend channel for most of 2024. Then they traded down to the bottom end of that trend channel, traded up to the top, got a little bit higher than the trend channel, came down and tested the bottom, rode along the top, tested the bottom, and it looks like we're getting ready to test the bottom again. So if this is the stock for you, you're getting to a pretty good buy price right here. Let's go down to, let me show you the accumulation line. That's pretty much been up and to the right. It's at a 3-year high at the moment. So there is still a lot of buyers coming into this one. Let's go back and just look at 1 year. So the 5-day was trying to turn up, and today's action is pulling that 5-day average down. I have a 20-day simple moving average on this one instead of an exponential. I'll change that. I'm trying to get more in the habit of using the 21 on these. So let me just change that real quick. Okay, so the 21-day EMA is moving downward. Yesterday, they went up and tested it. You can see right here. And they sold off quite a bit this morning, but intraday, so the shape of this candle tells me it started off lower, and it looks like it's been pushing up during the day. Maybe we can look at the intraday right after this. They did hold the fort on the last pullback, so it didn't pull all the way down to 30. That's actually pretty good news. The RSI is going down a bit this today. Looks like they've broken that 60 line on the RSI several times over the last few months. PPO is in bearish territory, but not by much. Looks like 0.59% or so. And in a couple of days, if they could get this price action still moving to the upside, which it looks like buyers want to push it back up, then you'd get a bullish crossover here. So if this is a stock for you, you're getting pretty close to a buy point if today isn't the day. Somewhere anywhere along this bottom part of this trend channel would probably be a pretty good place to buy.
Thanks, Daryl. That definitely is a pretty interesting trend channel. Thanks for covering that. All right, so turning our attention to the general market, looks like we've got the Dow is in the green, S&P slightly in the green, and the NASDAQ's just hanging on to a small gain. The Russell small caps are having a good day. And looking at what is going up, what's going down, looks like we have NVIDIA under a little bit of pressure. Broadcom's down a bit. Microsoft's down the most, and then Google is up nicely. So it's a rotation day, so to speak. Some of the money coming out of Microsoft's ending up at Google, Tesla, some healthcare stocks, some energy stocks. Walmart catching a nice bid. Look at that, 1.1%. So that looks pretty good. And looks like some of these consumer discretionary retailers, Home Depot is up. So have you heard any news on how well the retail season is going this holiday season?
I heard Black Friday sales were 4% higher than last year. I think Cyber Monday was the same way.
Mm-hmm.
I think it exceeded the previous year, so that's somewhat good news. I keep hearing the consumer is in good shape despite all of the negative sentiment that they seem to share on surveys and what have you. They still seem to be buying. I hear a lot of that's going on credit cards, so that wouldn't necessarily be good news. But
yeah, but I don't know that that's different, right? Credit card buying or purchases has always been kind of the instrument for the shopper, is buying your credit card.
Yeah, I guess what I'm speaking of is they're holding balances. So
Uh-huh.
a lot of consumers are still paying the balance from last year's Christmas and putting this year's Christmas on top of it.
Got it. Yeah. Now that's a problem. Yeah.
Yeah, that does seem more of a problem to me.
So we got Mike and Shadow Guy all over CVS. It's under a little bit of pressure while some other names in healthcare have been rising. CVS is somewhat of a diversified within healthcare business with its retail operations handling pharmacies, but they also have a health insurance business and they provide health services at some of their locations. And this stock has really worked year to date, up 70%, and it pays a 3.5% dividend. And I'm glad I signed up for CVS because my shares have really performed well and I've been paid some income. Gotta love that. They're getting close to 100 billion in market cap, big revenue, P ratio next year, 2026, 11. Analysts think there's a discount. Looking at their forecast, we have 18 analysts covering it. They believe it's discounted, and the price targets are bunched together to some extent from 70 to 102. So to me, that's that just gives me confidence. It's like my convictions there that, hey, these guys are agreeing with their forecasts, and it looks like they're going to keep growing. They're a big outfit, 400 billion in revenue. So growing by 4% really adds up quickly. They're going to be nearing 500 billion in revenue in 2028. That is incredible. And of course, healthcare prescriptions, you're gonna, whether we have great economy, bad economy, you go get your prescriptions filled. You go into CVS. And they make a lot of money on the stuff that, of course, they put the pharmacy at the very end of the store, at the very back of the store, kind of like milk at a grocery store. It's a loss leader. And they put, greeting cards, makeup, snacks, kind of incidentals at the front of the store. So you have to walk through that section and, oh yeah, that's right. I gotta buy a bottle of shampoo, or I gotta buy, some makeup. And but back at the store is where they get the foot traffic through the store. So it's a good model for them. And overall, it's going to continue to grow, expand its profits. I think it's going to be a good business. I own a good sized position to CVS and would gladly buy more shares. Now I'm trying to concentrate my buying into a couple of other healthcare stocks. I'm trying to increase my very small share count in Novo Nordisk, Pfizer, and I think that's where my investment in healthcare is. Genmab has caught my attention. I own like 6 different healthcare stocks, so I'm invested in healthcare, and CVS has probably been one of the better performing stocks of 2025, the best one in healthcare. I'd probably say that. And I continue to think that CVS has got a nice discount on it. It's got a 27% discount after it's gone up the way it's gone up. So this one's solid, very solid. Glad that I invested in it, and I hope it continues to rise. I think it will. CVS historically has been much higher. It's gotten to above $100 a share. So we're not going to a place it's never been before. It could go up to $100 a share. What do you think of CVS?
Okay, we haven't actually looked at this one before. I don't have any charts saved on it anyway. Looks like they've been on a pretty steady increase this year. And the PPO is trying to move into bearish territory, and the RSI is going down. So they're trading at 76.51 today. They did trade at 76 just a few days ago, and it bounced off that support line. It looks like on October the 30th, it was also at that point. So if that tends to hold, I think 76 would be about the largest pull down we would see here over this short term. It has tested the 200-day 1, 2, 3 times over the past year. It is trading below the 50 line at the moment, but that's still increasing. So this might be a good place to pick up a few shares if you want to add to your holding.
Yeah, and I heard some good comments before we started streaming that historically healthcare tends to be a safety or a safe sector to rotate into. But the current investing is not about safety, it's about growth. And you're seeing that some healthcare stocks are showing really good growth and the stocks are priced really low. So there's a lot of good upside, which is why you're seeing stocks catch a really nice bid. Shadow Guy, biggest winner today. Got to go across the Atlantic to Switzerland. Montana Aerospace, 4%. Nicely done. So it looks like Putin in Russia had some provocative comments aimed at Europe. So I think it it sent this stock higher. Like, hey, if European countries are going to have to arm themselves, they're probably going to buy more stuff from Montana Aerospace. So congratulations on that one, Shadow Guy. Hopefully it keeps rising. All right. Any new moves here on the heat map? Nope. We're still where we're at. All right. All right. So how you doing on time, Daryl?
I have a few more minutes.
All right. Let's go a few more minutes. And Marvell was a winner yesterday after it announced its earnings. And it's up, boy, it was up about 8 or 9% last night. And now it's just up 3.7. Maybe the whole kind of attitude toward NVIDIA and other stocks in semiconductor, because I saw like Micron was under pressure, Broadcom's under pressure. It's keeping Marvell down a bit. Now, Marvell, the charts are pretty, it sold off a lot after it had been bid up. But I like what I'm seeing here for like the last 6 months. It's been going higher from 53 up to 96. It had very good earnings. The earnings were good. $82 billion market cap company, semiconductor. PE in 2026 is going to be 28.8. The earnings they announced, they had 36.8% growth. It's very good. And they've been on a really nice growth trend. Last 4 quarters, really good growth. They made themselves a pretty big company, knocking on the door of $6 billion last full year. Trailing 12 months, almost $8 billion. Awesome. Good job. And when we look at this semiconductor company, we have gross margins of 55, profit margin of 31, free cash flow margin of 20%. So those are really good numbers. Forecast. 32 analysts cover it. Plenty of coverage. Now, some analysts are a little skeptical. Some analysts are very optimistic. And looking at the forecast, we're in the year that's going to end February 1st, 2026, growing at 44% this year. And they're going to keep growing. So this is a good looking stock. Quarterly. So we're in the quarter. We're in this quarter. They're going to keep growing at this rate. So I like what I'm seeing. Solid business, good earnings. Isn't bid up a whole lot, but I think it's gone up a little bit since I started speaking about it. And Marvell, I updated my valuation on them yesterday. And they are close to fair price, so not compelling. And I think if I have access to NVIDIA at a discount, which is the case, they're discounted by like 10%, I'd rather buy NVIDIA, or I could buy other semiconductor stocks that have a better value to stock price. This one, it may work, it may not, and it's a smaller semiconductor stock. So this one here would be a pass, and it's having a good day, but just a little too expensive for me. Any thoughts on Marvell?
Yeah, the chart pretty much confirms what you're saying. So here we have the trend channel that is set back to the tariff era. I've connected a couple of lower points here, made a copy and connected as many points as I can to the upside. And you can see that the price action today, it was opened up higher and it looks like it's trailing lower at the day. So this is serving as resistance. The upper end of this trend channel is acting as resistance. The 5-day is still moving higher. The 200-day is actually declining. So that's a bit concerning. They did pretty much hold a 40 RSI here on the latest drawback right here, which I don't think is out of the question in the not too distant future. I see RSIs that were higher back on this push higher. They couldn't quite maintain that same level of momentum despite the price trying to get to the same high. And the interesting thing that I would watch here over the next day or two is can it break above this level? It looks like it's at it, right at that level. So I'm looking at this RSI level right here. If it can break above that, then I don't suspect that's going to happen. I think it's going to pull back from here. But that would be an interesting signal. If it can't hold above this previous high and starts coming back down, then I think you're probably going to come back to maybe even the bottom side of this trend channel, at least to the midpoint. The PPO is positive. It's in bullish territory right now, as is the RSI, but I would watch the RSI and see if it can hold above the previous high.
Thanks, Daryl. All right, we're headed for home here. We got one more stock and maybe a few comments on a couple of others, and then we'll end the show. Qualcomm is up a little bit today, and the question was asked by Magical Self, is it still a buy? So the short answer is yes. It's a discounted stock that hasn't really been bid up during the big semiconductor rise, but they really have been performing quite well. They've been selling a lot of semiconductors just into the mobile handset market. Things like the iPhone, Samsung's Galaxies, even the Pixels from Google, they run the Qualcomm chips, and volume sales have been good for phones. So that's been a good market for them. It's not in the data center, so they're not really bid up. The forward P is only 14.2. Analysts think that there is a discount, and you get paid a dividend, 2%. They have been growing recently, so that looks good. It's a pretty good-sized company with $44 billion in the last full year. And we have 17 analysts commenting on the company. They say it's discounted by 8.42%. We look at the forecast, we're seeing growth quarterly. So we're in the quarter that is here, 6.7% growth. They're going to see a little bit of growth in the next quarter that's going to be reported, and then 7% there. Kind of a lackluster quarter down the road. So it doesn't look like an overly exciting year, which is part of why the market's not super excited about them. They're not in the data center. They're growing, but not incredibly. They are expanding their profits, which is good. But overall, this is a discounted stock that pays a dividend. And I have a good discount on Qualcomm. It's a very well-known company. I have a lot of conviction because it's a good business. It's going to be good in 5 years. And right now it's discounted by 43% when I look at the value of their cash flows and the value of their profits. So overall, Qualcomm's a buy in my book. What are you seeing on the charts for Qualcomm?
So we have looked at this one before, and this horizontal line right here, this is over a 5-year chart, and we put that support line there because we have seen several tests as resistance and support, so on both the upside and the downside. And then we put this upper one here at this high. It was tested at this high, here, 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 and here. So it looks like a pretty good support lines and resistance lines to look at. So I'm going to now to just a 1-year view. So we had previously drawn this trend channel. We had the lines about to right here. So while you were speaking, I just adjusted them out to take the trend channel past where we're currently trading. So the trend channel still looks to be intact. We did break below the lower end for a couple of days back in October, and we traded right at the bottom of the trend channel for at least a week back in August. And now we have broken down below that, but we are starting to recover. And we're coming back to this resistance line here that's just below the trend channel. So I'm looking for a move back into the trend channel on this one. Let me just step down to maybe like 3 months. So the 200-day looks to be increasing. The 20-day had been declining, but it looks like it's turned around and moving back higher. The 50-day is still moving higher. And yesterday we were able to trade above that after trading for a couple of weeks below that. So we are above it. If it can hold above the 50 through Friday, then I think that's a pretty solid move back toward this trend channel. We held the 40 line on this pullback, even though it broke out of the trend channel. We did hold a 40 RSI. Come and get into an oversold condition like we did here. So momentum stayed fairly solid. I'd really like to see it break out at least above the 60 RSI. On the last attempt, it stalled out there, but we did get 1 day of rising past the 70 line. I suspect this is when they issued earnings, would be my guess. They were up 11%. No, this was on an announcement of an AI chip or something. So they spiked way up and pretty much been selling off since that time. Lots of volume on that particular day.
They announced that they were going to enter the data center, and they had
there you go.
to do that.
Yeah. So the RSI, they are getting a bullish crossover in bearish territory. So that's coming from a fairly low levels. I expect it to get back into the channel. I don't expect them to hit home runs here, but I'd like for it to stay within that trend channel.
Perfect. All right, so let's put the finishing touches on our stream today. We had a lot of people. Thanks everybody. Great stream audience today. Thank you. And looks like Mike had a couple comments that I'm going to go on. Elf Beauty is up nicely for him. 5.46. What's going on here? Did they announce? No, just maybe. I don't know why they're up so much, but they are up. It's a small cap. So maybe an investor came in, bought a good number of shares, and boom, we're off to the races. And Path, UiPath came up quite a bit on the stream yesterday. If you want to look at the recording, and I put the timestamps on the live stream so you can just jump right to UiPath and listen to my comments there. I am like on the edge of being really interested in this stock. It's in the right place. If they could just grow. Now they're going to announce after the market closes. It's bid up a bit, but this stock, and I forgot to ask, what is the implied move on Salesforce? Let's do that, and then we'll end the show. And I'm going to double down and ask if you could do or look it up on UiPath. But I'm imagining my best guess is UiPath is going to move a lot tonight. If it beats and has a really good story, it could go up 20%. or it can go the other way, because they're in the right space. They're doing software that helps or that really enables businesses to do AI, agentic AI, where the AI is actually doing stuff, machine learning, that kind of thing. And that's all they do. They don't do something else and do this. No, this is what they do. And I've been kind of surprised that their revenue hasn't been as good as I would have thought, because the revenue hasn't been all that great, kind of slow, as a matter of fact. It's been growing nicely. The bump from 6 to 14, this is what caught my attention. If they go from 14 to 20 or 25, man, this thing's going to fly up. I think it really is. And I will buy it after that, because I'll be excited about their future. We are looking at the quarter. So the quarter they're going to announce is this one. They're supposed to come in at 13. So that's priced in. If they came in at like 16 or higher, look out. And if they updated this forecast and said, no, we're going to grow by like 15, 20% in future quarters or the next quarter, this stock is really going to move. The thing that's been a surprise is they're in the right place, right? AI. But they're not growing that fast and they're not that big. So that's really interesting to see tonight. That is going to be part of my viewing plan. So back to you, sir. If you can tell us the implied move on Path and Salesforce, that'd be awesome.
So let me
sorry to put you on the spot.
That's all right. You're not putting me on the spot. Okay, so we're looking at Path first. So I just pull up the chart in stock charts, and they have an options chain here. You just press this options button. And since they're reporting today, I just pull up the options expiration for this Friday.
Mm-hmm.
If they didn't have weekly options, you would just go to the first option in the chain that they have available. But this one's pretty easy because they do have weekly options. So then you just scroll down. We get to where you're at the money.
Mm-hmm.
And I look for this midpoint price. So you have a bid and an ask, and then the midpoint. So I just take the midpoint. So that's $1.17. So I get out my trusty calculator here because I don't do math in my head very well. So 117, and then I look at the mid price on the other side, 0.78. I add those two together and divide it by this at the money price. So divided by 15. So they have an implied move of 13%. Pretty big number.
Yeah.
So,
I think
yep.
I would agree with that.
Yep. Then we can
you
go
do
to
CRM?
Yep, I'll do that one too. So the same thing, December the 5th, they do have weekly options. And then the midpoint here is 1022 and 798. And divided by 237.5. That's a 7.7%.
Man. All right. Well, that'll be interesting to watch later today. We will see where Path will land and where Salesforce will land. That is going to be interesting. So that's it, folks.
Do you have any idea how much Path has moved in the past around their earnings?
I don't. We can look at it real quick. Okay.
Mike, I
Well,
hope you knew I was making fun there about the chart being right. The charts are right. It's my interpretation of the charts you have to question.
so look at this. So the last time they announced was October 3rd or so. And looking at the charts, it was quite a ride, right? You have the stock rose very quickly and then it dropped. So you went up and down over the course of 3 weeks. Now that's in October, and October wasn't that bad of a month. It was November that we had the sell off. But since just getting really bid up, Path has sold off 31%. And now it's been going higher. So,
Okay,
man, this
so 3 quarters ago, on the day after earnings, they had a big black bar, and the high was $14.99 and the low was $12.91. So they had over a $2 swing, and they did shoot up and then close quite a bit lower. And then the next earnings, they traded up 5.9%. And then this last, that's coming up now. Let's see, the previous earnings, wow, they were down 15.7%. So 13% seems like a pretty reasonable implied move.
Wow. Yeah, big moves. And Salesforce is up a little bit today. This one's just been under pressure. And look at that, man, just down. And we'll see what they have to create some excitement for their company. This has historically been a really good business. They're really good. They're really good at what they do. But somehow they have to pull a rabbit out of a hat and show we really are growing our AI business, and here's evidence of it. Here's our forecast is going to be better. Benioff, already their CEO, came out a couple weeks ago, maybe a month ago, and he updated the long-term sales forecast. He was already out there saying, we're going to do better than people are expecting us to do. And he kind of put that out there. So he's probably going to follow that up and share with everyone what they've got going on, show some evidence that their growth plan is working, and we'll see how it goes. All right. So what's going on with your channel, Daryl? What's going on that's exciting with your channel?
I put out a couple videos, one on Sunday and one on Monday, and I've got a couple other ideas that I'm working on right now. One is to review the chart on Coke. That's had a pretty impressive return here, and a good example of a cup and handle pattern. Mm-hmm. So I'll probably do a video on that over the next day or so.
Great. So I'm going to do a video today. Over the last couple of stream sessions and member calls, for this week, I've got 3 stocks that look really interesting, good opportunities. So I'm going to cover those today. That'll be the next video I do. And then I'm going to create that. And then the next video, which that's going to be released to advanced members. And then from there, I'm going to do a video, and I'm going to try to go through my whole process just using AI. So I'm not going to go to stock analysis. I'm not going to use my evaluation model. I'm going to try to go through my process. I'll cite my process. This is what I want to know about a company in order to make a decision to buy, hold, or sell, and then try to go through all the steps. And it's kind of a little bit of a science project of seeing, is AI getting there? I've done that before where I tried to do that to get through the whole process. And AI did do some things well, a couple of the steps, but I couldn't do the whole process. So I wanted to see how close, how far are we from using AI. Now, as I'll cite in the video, we use calculators as an example, but you still need to know the arithmetic in order to understand the logic, right? If you just see numbers coming out of a screen, you don't know if, is 28% a good growth rate or is 2.8% a good growth rate? What's the industry? What's the desirability of that business? So it's almost like you need to know what a good recipe looks like. You need to know what great looks like. You need to be able to interpret results out of AI. So it's not good enough for you to ask AI, hey, what's this? What's the answer to this arithmetic question? We need to know what would be deemed a good ratio, a bad ratio, and so forth. So I'll try to cite that in the video. I thought that might be a video worth doing, and I'll release that later today. So advanced investors, look out for that. Hopefully you enjoy it and give me feedback on it. Give me feedback on what videos you'd like me to do. If you're not a member already, please consider being a member. It'd be great to have you. If you're already a member, thank you so much. It's awesome to have you guys as part of the community. And I appreciate all your support, all your involvement on the streams, on the member calls, on the Discord. Really appreciate you. And with that, everybody, good luck with your investments. It's going to be an exciting evening. And we have a member call tonight. We could talk about the earnings that are going to come out. And I probably will comment on Salesforce, maybe in a video for sure. And maybe Path as well if I have time. And that'll be my day. And then I'll wake up tomorrow and do it all over again. I'll probably stream tomorrow night. So for the evening crew, I'll probably stream tomorrow night starting at 7 p.m. Eastern and go for a couple hours, watch a little football and analyze some stocks. That'll be my Thursday night. So with that, thank you very much, Daryl. Great work today.
Thank you.
And thanks everybody for joining us. We had a big audience today. We really appreciate it and look forward to streaming again together on Friday. Hopefully you can join us. Good luck, everyone.
Take care.